matter of life and death. Greek doctors say spending cuts are risking lives. Now, in such a desperate state, is it time that Greece told its lenders enough is enough? We'll be asking the country's Labour Minister. Also on the programme, we take our first step on the Panama paper trail, and it starts with a tax lawyer baking cookies in Miami. And what makes an excellent wine? Good grapes, good soil, sunshine, and ducks, of course. Well, all that and more on Money Talks. Hello, I'm Matthew Moore, and this is TRT World's new programme looking at the financial news that affects us all. Now, from our studios in Istanbul, we'll be bringing you the stories from around the world. As this is our first programme, we'd like to give you a quick idea of what you can expect on Money Talks. From Wall Street to Main Street, and the people in power, Money Talks. And so do we. From the Panama Papers...
It was in existence when I started practicing in 1977.
...to world leaders, climate change, and the lighter side of business. Wherever there's money, there's a story. Money Talks helps the 99% navigate their changing financial world. With reporters around the globe, we look at how new technology can destroy jobs, but also create new opportunities. We put your business questions to the people who know, and take a look at who's winning and who's losing in the world of business. In short, we make financial news your business. Well, where better to start than in Greece, the most indebted country in Europe, constantly in crisis this entire decade. Well, Greece is cutting public spending to secure loans from the European partners, but it's a painful process. Over the past week, we've seen doctors and nurses staging a walkout because they say patients are dying in hospital corridors due to cutbacks in funding. The country's economy is still shrinking and unemployment is 24%. So what should Greece do next? In a moment, we'll hear from Greece's Labour Minister, George Katrogalos. But first, let's go to Athens to see how they got into the mess in the first place.
In 2009, Greece admitted it had been understating its deficit figures for years. It was 12.9% of GDP, more than 4 times the European Union's limit of 3%. It raised alarm bells, and the country suddenly found itself out in the cold as financial markets refused to sanction further borrowing. By 2010, Greece looked certain to declare bankruptcy, threatening a new financial crisis across the Eurozone and potentially further afield. The so-called Troika, that's the International Monetary Fund, European Central Bank and the European Commission intervened, issuing the first of 2 bailouts worth around $272 billion. But it was barely enough to keep Greece afloat. Austerity measures designed to reduce the deficit were also biting. Unemployment soared and people took to the streets. Fast forward to 2016, and Greece has now had 3 bailouts, but things are still not looking up. Greece's economy has shrunk by around a quarter since 2010, and 1 in 4 people are still out of work. The debt has soared to more than $333 billion. That's 180% of GDP, a figure Greece simply can't repay. And though it's been promised debt relief, that's on the condition that it continues to carry out tough reforms, including spending cuts and tax hikes.
So what lies ahead for Greece? Well, joining us from Athens is the country's Labour Minister, George Katrogalos. Minister, thank you very much for joining us. Now, the last time you and I met in Athens in July of last year, Greece had narrowly avoided being pushed out of the Eurozone by accepting harsher terms, more austerity measures. And quite frankly, it's the same scenario right now. You're going to have to accept more austerity measures, more pain. When is Greece going to default on its loans?
We have now a breakthrough. I'm going to go back to that. Just to say that, as you mentioned, in July, we had to accept a very painful forced compromise that was the new memorandum, the new agreement with the Troika. We tried to avoid new austerity measures because it was clear that neither in Greece nor in Europe this recipe works. It is in a way more lethal, a cure more lethal than the disease, crisis itself. But now I think we are very close to a breakthrough because we have terminated this famous evaluation of our reforms, and that puts an end to a long political uncertainty that lasts at least till 2014.
Right,
so
but right now you're paying only the interest on a vast loan. And, you know, if I was living in a house where I could only afford the interest, while the loan was getting bigger and bigger and bigger, I'd move house. The fact is, Greece can't afford to pay this loan, can it?
First of all, much of the new debt we are getting is exactly to repay old debt. It is not for the actual economy. So you have a point. But my point is the following. For the first time, we have a roadmap for the reduction of the debt. So the last decision of the Eurogroup is indeed a breakthrough. First, because it puts an end to the political uncertainty which has poisoned economy for many years. And second, exactly because for the first time we have some hope of reduction of this mountain of debt we have acquired.
Okay, so you think you're going to get the debt relief perhaps in the coming months or so. But the fact is you've had to agree to tax hikes, privatizations, spending cuts. The Syriza party to which you belong is a socialist party. It promised the electorate it would fight the austerity measures. How can they trust you going forward?
First of all, they have trusted us again. After we have accepted this painful compromise, we have gone to elections exactly because we had our mandate. Our mandate should be renewed again. And what we have promised to our electorate, and we are trying to keep this promise. We are going to respect our commitments. And indeed, there are a lot of neoliberal elements of austerity in the memorandum we have signed. But we are trying to incorporate these measures in a much more sweeping reforms. In other ways, we are trying to neutralize the austerity and the neoliberal measures of the memoranda with countermeasures of our own initiative.
Okay, look. Looking ahead, Minister, to later this year, the Troika is going to want to see progress on labour reforms which you are going to be responsible for. It's going to make it easier to sack people in the future in the private sector. Are you going to support those reforms?
Exactly the opposite. The Greek economy needs new posts, not new layoffs. But it is not a Greek issue that. Now in Europe, we have a confrontation of two different visions for its future. One, a neoliberal flexibility, full liberalization of the work market. Another one that wants to keep on with the tradition of social Europe, the European social model. That's why we have tried to Europeanize the discussion. We have asked the European Parliament to follow by close the negotiations and the International Labour Organization to have a final say on the whole process. So I'm hopeful that completely on the opposite, not only we are not going to take new harsh measures, but we are going to reintroduce again collective bargaining, which was the first victim of the crisis.
Okay, Labour Minister for Greece, Georgios Katrougalos, thank you very much for your time. Let's get the view from the city now. Mike Ingram is an analyst at BGC Partners in London. He, like everyone else on the markets, has been watching Greece closely for the last several years. Mike Ingram, thank you very much for joining us. Let's just start with Greece's chances of defaulting at some point. What's the view there?
Well, I understand the Minister's optimism. Unfortunately, I can't share it. I feel it's only a matter of time until Greece does indeed default on its debt. Of course, we've had many episodes and many phases of extend and pretend. Most recently in the Eurozone ministers likely to sign off on another €7.5 billion later on this week, and I'm assuming this is to keep the airwaves clean of possible Brexit ahead of the UK referendum. But ultimately, as you say in your report, national debt to GDP, 180%. At best, that has stabilised. A banking sector with non-performing exposures over 3 times tangible equity. Unemployment, youth unemployment, the future of Greece, over 40%. And in terms of the more immediate economic outlook, well, Greece is still having to endure brutal austerity, and the Troika's plan is for years of this. Primary surpluses before interest payments, 3.5% of GDP for 7 years. This is not going to happen because the growth needed to generate that is not going to appear. Private sector economists know that. It's only the IMF and the European Commission that seem to believe that these numbers might be better. So in the meantime, Greece remains in a debtor's prison. It is patrolled by German guards, and the only means of escape in the absence of parole is to dig a tunnel.
OK, Mike Ingram in London, thank you for that. Obviously, there's a story we will be watching over the next few months to see if there is indeed a default. So that's the Greek debt crisis. Now let's go around the world in 60 seconds for the top business headlines. Microsoft is buying the world's largest professional network, LinkedIn, in a deal worth more than $26 billion. LinkedIn shares jumped nearly 50% following the announcement of an all-cash buyout. Microsoft says the company will retain its independence and that Jeff Weiner will remain the CEO. A strike by Air France pilots threatens to leave thousands of football fans stranded. The national carrier's employees are protesting against longer working hours. More than 1.5 million people are travelling to France for Euro 2016, but many have missed flights due to delays and cancellations. Garbage collectors and rail and energy workers are also on strike. And South Korea's Lotte Group has scrapped plans to raise $4.5 billion through an initial public offering. It follows a government probe into embezzlement and slush funds. The listing would have been the world's largest this year. The stalled IPO will affect Lotte's plans to open more hotels and duty-free shops around the world. Well, plenty more coming up after the break on Money Talks. We take you to Miami for the first installment of the Panama Paper Trail. Find out how ducks are helping to make wine. And in Biz Q&A, we'll tell you what to do if you have a great idea for an app.